United Health Group is trading at historic lows, and many investors are asking, is this a bargain opportunity or is it a value trap? Here's what you need to know about United Health Group and everything that has been happening over the last week. And welcome back to the Value Investor Show. Today, I'll walk you through, firstly, the acquisition of AMEDisys, which I'm sure many of you have seen the news, the DoJ antitrust settlement for the acquisition, the additional regulatory risk for UNH moving forward, and where does the company go from here in terms of the regulatory uncertainty and everything that they have been trying to close those gaps, as well as the intrinsic value and final thoughts for the company. Firstly, before we dive into Amedisys, I wanted to flag the fact that UNH has been one of the most heavily bought stocks by hedge funds in the second quarter of 2025. There are still a few days to go until all the 13 filings are reported, but United Health Group as is one of the top 10 buys from hedge funds. There's also Christopher Davis, who, if you don't know, is essentially one of the best value investors of all time, and his Davis Advisors company has added 1 million United Health Group shares. Christopher Davis is notorious for his value investing approach. In fact, he has said you have to look at business as if you own it, and he's an advocate of Warren Buffett. He's a huge fan of Warren Buffett. He has followed Warren Buffett principles, and so the fact that other value investors are also buying United Health Group shows us that they are also seeing something, which is the fact that United Health Group is currently undervalued. And it gives me confidence as an investor, as a value investor, that yes, what my numbers show that United Health is undervalued is also being followed by other advisors and value investors. This is not financial advice, but in my opinion, United Health Group is undervalued. And with that being said, let's talk about AMEDisys. So before we jump to what happened last week, I want to take back a step and talk you through what happened 2 years ago. So 2 years ago, United Health Group agreed to buy AMEDisys for $3.3 billion. AMEDisys, for those that don't know, is one of the largest US providers of home health care, and that includes in-home medical services, hospice care like end-of-life medical, emotional, and spiritual support, and personal care like non-medical help with daily activities. And United Health Group agreed to buy AMEDisys for $3.3 billion. AMEDisys is a public company, and they essentially wanted to buy it, or agreed to buy it, for roughly $103 or $104 a share. The reason why United Health saw an opportunity in AMEDisys is based upon 5 buckets. The first one is the expansion of the home-based care offering that United Health Group has. By buying AMEDisys, it would enable UNH to serve more patients at home by leveraging AMEDisys' network. In fact, they do think that they can grow their revenue and their new service lines, and they could capture more market share of the $130 billion home health market in the US. The second part is vertical integration. By buying AMEDisys, UNH is basically positioning itself to control the full patient journey from insurance to clinics to home care, and that allows the company to have higher margins by keeping all the services in-house and reduces leakage to competitors. The third part is Medicare Advantage synergy. By targeting aging, chronically ill members with coordinated home care to improve outcomes, it would allow the company to boost its Medicare Advantage star ratings and higher CMS reimbursement, which would in fact reduce churn. The fourth important aspect is cost control. By shifting from high-cost inpatient to lower-cost home care, UNH would be able to cut its medical loss ratio. And finally is defensive positioning. Essentially, this acquisition protects the market share and ensures the long-term competitive advantage in integrated care. So as you guys can tell, this acquisition would essentially allow UNH to tap a new service line, increase revenues, decrease costs, and improve margins, while all doing that while integrating vertically into controlling the full patient journey, which is in fact why the DOJ wanted to block this acquisition. As I said, AMEDisys is a public company and it is not a growth stock, but UNH bought it for 2 reasons: for its network and for the vertical integration that UNH would benefit from this company. Revenues of the company are roughly $2.5 billion per year, and the company has been growing at roughly 10% year over year. The net income as well has been growing at 6%. This is not a high margin business. The net margins over the last 3 years have been roughly 1 to 3%. However, United Health Group is betting that by acquiring this company, they can further boost margins because of what we just said, the vertical integration, the cost cutting, the integration with other services as well, and essentially controlling the whole value chain movement of a patient from insurance to home care. Before we dive into the rest of the video, I want to thank today's sponsor, Fiscal AI. If you're serious about investing, this platform is a game changer. It gives you beautiful, clear graphs with all the KPIs you care about in absolute numbers and percentage changes. It has powerful forecasting tools so that you can project performance and even calculate a company's intrinsic value. It has industry benchmarks so you know exactly how a business stacks up, and it has detailed equity research papers with everything you need. Above all that, it's all integrated with AI, so you can leverage AI in every part of your analysis. This is honestly a no-brainer platform. I use it every single day, and for a limited time, you can get 15% off using my link in the description and pinned comment below. Don't miss it, sign up now. Now this takes us to November 2024, when the DoJ came in a few months post-agreement and blocked the acquisition. They sued to block United Health Group acquisition because they cited fears of reduced competition in the home health and hospice sector. So in DOJ's eyes, this was an acquisition that would allow UNH to have a competitive advantage and reduce competition significantly in the segment. And last week, some great news came for United Health Group, which is the fact that they have finally reached a settlement with the DOJ to acquire Amedisys, but of course it comes under certain condition. So in August 2025, in fact last week, the DOJ and United Health Group settled, and the settlement consisted that United Health will divest 164 home health and hospice locations across 19 states, which essentially accounts for 500 million in annual revenue, which is roughly 25% of the business, as we've seen from the revenues of Amedisys. There's also some additional conditions like a 1.1 million penalty, which is very minor, imposed to Amedisys for misinterpretations during the regulatory review, and a monitoring mechanism that will be put in place to oversee divestiture compliance and competing buyers, equipping them with assets and stuff to ensure competition is preserved. So the win for United Health is essentially that they have finally got rid of at least one of the outstanding issues with the DOJ, and they have managed to buy Amedisys. I also think that the impact of the 25% revenue is minimal. I think the purpose of the acquisition wasn't the revenue, because if you compare it to relative levels of the revenues that, for example, United Health is making, the revenue of Amedisys is very minor, and 500 million of the 400 billion that United Health is making is insignificant. However, what Amedisys brings to the table is firstly its network, and secondly its vertical integration, the ability of United Health to vertically integrate its offerings. And that's the most important part of Amedisys, not the size of the business, but the offerings, the services, and the network that Amedisys brings onto the table. So even with that divestment, I do think that this is a good deal for United Health. The second win for United Health is the fact that they have reached a settlement with the DOJ. They still have so many outstanding issues with the DOJ. So the fact that they have finally agreed and reached within a settlement with the DOJ is a positive for the company, for investors to start closing in those gaps. But with that being said, it could take some time to materialize. It still needs a public comment period. It's a step under the Tiny Act for public feedback on the settlement, which is in progress. It also has to go through judicial approval. The federal court must approve the settlement. The deal must also close, which at the earliest it could be 2026. There's still some mandated divestitures, as we said, which could happen before or at closing, which would further reduce intended operational synergies and essentially also extend the timeline. And finally, it could have an operational impact because the management must focus on the compliance and on the integration, which could further push timelines, and there is a risk of disruption and slower execution on other strategic priorities. So overall, this could take some time to materialize, which further enhances one key point, which is United Health is a long-term play. It's not a short-term stock. In the short term, it could be more volatile, it could go more downwards, but in the long term, the fundamentals are very strong for this company. Which takes me to the second part of this video, a very important part, that United Health still faces regulatory scrutiny. In fact, United Health said that it faces 1.6 billion in potential settlement costs for 2025. Hemsley said that the company has put on pause on exploring corporate deals, which means essentially acquiring new companies because of the DoJ scrutiny, because they have seen what happened the last year. And he essentially said, we have stopped that entire activity. We're only focused on the performance of the business that we have, and we'll pick up portfolio assessment somewhere down the road. So the CEO is basically saying, we cannot afford to make more acquisitions. We have already tried in the past and look where it got us. And we're now focused on performance. We are now focused on operational excellence, on improving net margins, and we will pick portfolio assessment somewhere down the road, potentially in 2-3 years, when the rest goes away. So in terms of what is still being investigated, there are a few things that are still open-ended discussions that need to close in order for the whole DOJ and market reaction to go away. Firstly, there is an ongoing DOJ probe. There is an investigation into whether the UNH inflated Medicare Advantage revenues via risk adjustment coding was done without proper medical justification, which could impact the company by potential fines, by potential enforced repayment, reputational damage, of course, which we have already seen, and tighter oversight. And for me as an investor, I will keep monitoring the DOJ statements, the cases, and any settlement talks. Now, what that means for the market is, in the past, we've seen the shares of the company fall 9 to 13% on the probe news, showing that the market is very sensitive to compliance headlines. So potentially the impact would be more short-term volatility, more downward pressure on the stock if the probe escalates. And as an investor, I will keep an eye on the news flow, on the exposure, and how the risk profile performs. The third is the management response, because UNH essentially is denying awareness of the new probe. It's asserting compliance, but it's also saying that it will navigate legal process and investor settlement. So if evidence emerges, it could distract leadership for operational focus, and therefore it's really important to understand, okay, what happens from here onwards and how will management react to it, even if it's good or bad news, and what will happen next. So there's still a lot of uncertainty. There's still definitely a lot of risk with these probes, with these investigations that have been going on for a very long time, and it will essentially take time before we see those investigations closed, which is in fact why United Health remains quite a risky stock, because of those openings that need to be closed as soon as we can. So the big question is, where does UNH go from here? Because obviously we know that earnings will not improve anytime soon. We know that revenues are growing, but the margins are decreasing. But where does the company go from here? Well, I think that we'll likely see increased share buybacks and increased dividends to, firstly, increase buybacks to reach their earnings targets, largely because they said that they won't pursue more acquisitions, and also because of the fact that they can't pursue more acquisitions. And ultimately, I think they will settle and pay a fine with the rest of the DOJ investigations. But with these things moving so slowly, a resolution could even come sometime next year, and that would even be considered fast. So until that resolution, until that fine, until that agreement comes into place, there is still a lot of uncertainty. And by then, I expect the company to buy buybacks and to increase dividends. Now, in terms of the valuation of the company, before we dive into the bear, the base, and the bull case scenario, I wanted to flag that the management maintained a 13 to 16% long-term EPS growth target, and they expect a 10% growth by 2026. And I'm only flagging this because it will make sense once we dive into the numbers of our 3 case scenarios. So before we dive into the bear case, I have included in my estimate the impact of 2025 for all three case scenarios. So there is an impact on net income, and I have already estimated revenues based on what the management have guided both for net income and revenue. And for my bear case, I have included revenue, EPS, and free cash flow growth of 8% beyond 2025. So that's 8% year on year from 2025, which essentially means that even at the 2030 point, we wouldn't reach the levels the company had in 2023. So it would still be lagging the 2023 performance. And under those metrics, including a margin of safety of 50% and a discount rate of 10%, my average intrinsic value with margin of safety for the bear case is $173, which is roughly 35% below the current price. In my bear case, my 2030 price target would be 300 to 500 USD. So even in my bear case scenario, I do not expect to lose any money as I currently enter the company at $280, but it would be very bad. It would mean that I'm underperforming the S&P 500, which is not something that I want. But at the same time, it shows that I am taking a risk-based approach. I'm trying to minimize my risk as much as possible. Now, for the base case, I have slightly adjusted the revenue, EPS, and free cash flow estimates, growth estimates. And remember, guys, the management did say that they expect 10% growth for 2026 and then 13 to 16%. So even in my base case, I'm below those estimates. And under those estimates, under my estimates, I'm essentially seeing that net income reaches or just surpasses the 2023 level in 2030. And under those scenarios, under those growth estimates, my average intrinsic value with margin of safety is 205, which is roughly 20% below my current stock price. My 2030 price target for the base case is 500 to 700 USD. So I do think that the base case is the more likable, the most likely case. And under this case scenario, I do expect the stock to overperform the S&P 500. And I do think that this case is the most probable outcome. I also have a bull case which could very much be realistic. In fact, many analysts and in fact UNH as well in many instances are expecting the bull case to become reality. Under the bull case scenario, the revenue growth I have estimated is 10% and the EPS and free cash flow growth estimate is 16%, which is at the higher end of the spectrum of the estimation that the management has given. And under this scenario, we're basically seeing the net income to double from the 2025 levels to the 2030 levels. And under that scenario, the average intrinsic value for the stock under my three different valuation methods is $257, which is just over the current price. And under this current price, the 2030 price target is 700 to 900 USD. In the meantime, guys, remember that United Health Group is a company that is distributing dividend, is buying back stock, as you remember from the chart before. So the company itself is returning 3 to 4% back to the shareholders at this current level. So whatever return the stock appreciates to, you also have that 3 to 4% dividend / share buyback that is being returned to you. So overall, this stock for me is still very attractive. Shout out to donations. Thank you so much for the love and the support. Please like, please comment, please subscribe. Follow me on X for daily updates at the Value Invest Show. And I'll see you guys on the next video.